39% of Americans pick technology, connected car, as their #1 criteria when picking cars now. And so this is a motif, not of the car companies, but the arms dealers, the technology providers, the component to the connected and autonomous cars. So it includes companies like Delphi and Safety System, Freescale, NXP, TE Connectivity, Sensata. So this is a 26 stock portfolio weighted by their exposure to connected cars.
Harman, another one of the names, which, by the way, all of the names, at least the top 4 names on the list, have done really well. Harman, 1 year up 25%, 5 years, 200%. TE Connectivity up 165% over 5 years, 22% over 1 year, 16% year to date.
Do you have Mobileye in this index?
Mobileye's in there.
Okay. And just out of curiosity, what's the weighting for something like that,
so
where
Mobileye,
it's a pure play?
It's a 5.6%. So it's a revenue-adjusted market cap. So in this case, because of its exposure, most of it goes in and it weights in. The motif itself is up 6 points for the month, 12 points for the quarter, and 23 points for the year.
Yeah, so it's outpacing the S&P by leaps
cars,
and bounds.
And new cars, right? So if you thought the way to play this was to invest in the cars, that's not been doing well. Our new car motif's been in line with the S&P. But this is a motif that's actually outperforming that.
Hardeep, do you think maybe this is cannibalizing a little bit from an Internet of Things sector play? I mean, everything that we're talking about with regards to what you're doing with cars could be done on, say, truck trailers, intermodal containers, all these sorts of things. I think you're getting a little bit of feedback in that as well.
Absolutely.
Yes?
There are a lot of different ways to play the Internet of Things. We're working on motifs for smart home, where we have a wearables motif. But, I mean, the typical phone has about $20 worth of chips. A typical car has about $300 worth of chips. And as the Internet of Things proliferate, some of these players actually play multiple industries. You're absolutely right.
You have what I think people would be interested in, cause-driven investments, okay? You have a new deal with Pacific Life.
Absolutely.
Tell me about it.
So there are 2 big trends going on. One is a push towards index investing. The other is a push towards cause-driven investing. About 56% of Americans under the age of 43 identify cause as an important criteria when determining their investments. So we're partnering with Pacific Life, and we're launching a family of motifs around causes like fighting cancer, poverty. And the catch is Pacific Life is creating a subsidiary. These motifs are designed to track beta. So they have a beta of 1, and so they're really a nice way to play the beta component of your portfolio. But 20% of the revenues that Pacific Life gets from this venture will go to the specific charities, and the companies in the portfolio contribute to the same causes, things like Susan G. Komen Foundation in our Fighting Cancer motif, for example.
Motofinvesting.com? Is that how they find out more information?
And swellinvesting.com, which is a new venture with Pacific Life.
Hardeep, thanks.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thank you so much for checking out our channel. You can subscribe by clicking right here to check out the latest Mad Money CEO interviews, market news, financial advice, and product unboxing. Enjoy!